episode of Beating Alpha. This is episode 148, and we have a very special guest. His name is Tony Castronovo. So Tony is the founder and managing partner of Novo Multifamily Group that you can find on the website that's called novomultifamilygroup.com. And it's a real estate investment and asset management company. So Tony is a buy and hold investor as well, and a syndicator with over 6 years focused on real estate experience on both multifamily and single family, including acquisitions, construction operations, and property management. Currently owns and operates 80 units, split between two multifamily properties in Texas. And each of these properties were major reposition projects with significant value add driven by strategic capital improvements and tenant lease up strategies, of course. And the bio continues. So the rest of the bio will be included in the show notes. So make sure to go and read it out, and make sure to get in contact with Tony himself personally. And there's going to be a LinkedIn link included there as well. But Tony, personally, want to say a big thank you for joining me today on this episode.
Absolutely. Happy Friday.
Happy Friday. That's it. Happy Friday. I don't know when you guys are watching this episode. Maybe it's Monday. Who knows? But happy Friday. At least it was for us today. So again, Tony, I love the fact that you're involved with a multifamily business, and you're, acquiring more and more assets during, these times. So you're looking to buy more units. I'm pretty sure we're going to be talking about that, of course. But can you talk about your personal experience and the background? And how was there a person or some sort of event that kind of influenced to pursue a multifamily investing business?
Yeah, absolutely. And, I'll take it just a little bit further back. And,
Sure.
I got started in real estate in 2014. And at that time, I think like a lot of folks, that want to get into real estate, I started with that first single family house. And I think, my model, I always thought that I would be a buy and hold investor. I did try a little bit of flipping. And, I think everybody's watched all the shows on TV, HGTV and the DIY, and everybody gets excited about going in there and flipping a house. And that's great, and it works well for some people. But for me, it really wasn't about kind of the multiple transactions like that. I really wanted to have some passive income and, try to better the lives for some people. Looking for a place, a good quality place to be able to rent. So I started in single family. The first home that I purchased, I did the renovations myself. It was kind of a family project. It was kind of fun, demo day with the family and the kids. But that taught me a lot. It taught me the first lesson about scalability. And so I realized that I couldn't spend all my nights and weekends trying to renovate a house, especially if I wanted to really start building a portfolio. So I started to hire contractors. So that was my first opportunity, trying to vet good quality contractors and start adding to my Rolodex, building a network of people I could count on. And so, I went from one house to two houses to 8 houses eventually. And then at some point there, I started thinking, I'm adding a house about every 3 to 4 months. And that's just not fast enough. It's not where I want to go. And so I started thinking about multifamily. And at that point, my first thought was, well, I want to have savings on the tax side. So I wanted to leverage a 1031 tax exchange. And so to me, I decided to package the entire portfolio of homes and sell it as a single transaction, and then buy as much multifamily as I could. I had no idea that syndication was even a thing. So, to me, it was just, okay, I'm just going to go out there and use my own capital and my own credit and try to purchase a multifamily. And so I landed on a 20-unit multifamily in Bryan, College Station, Texas, which for some people you may know, that's home to Texas A&M University, the largest university in the U.S.
Okay. Good, good, good. Okay, so that's kind of a little bit of a background and your personal story of entry into multifamily. But if you don't mind me asking a question, but because I think you mentioned one part of again single family kind of operations where it's a crucial for a lot of real estate investors when it comes to looking for contractors, because you mentioned you're kind of was going about with your process of vetting contractors. So maybe you can give some advice on vetting potential contractors, because there are some people who are having troubles with that.
Yeah, it's tough. I mean, as investors, we're always looking to save money, right? I can't tell you how many forums I've seen where people say, I'm looking for a investor-friendly contractor. Well, what does that
Whatever
mean?
that means, yeah.
Cheap. It means cheap.
Yeah.
So the problem with that is if you don't find a contractor who's used to working with investors, you get stuck trying to train them to be an investor friendly type of contractor. And it may not work. You may have different expectations that there's certain quality that perhaps they're used to. And even the kind of property that you're trying to renovate, there's a big difference between trying to do a $500,000 flip on a single family home versus trying to just maybe put a little lipstick on a $700 a month unit in an apartment complex. So I think it's important to find the niche. When I was looking for contractors in the Bryan College Station area, I'm from the Houston area, so that's about maybe an hour and a half or so drive away. So when I went out to College Station, I needed to build my contractor database all over again, and I was leaving kind of the single family space in Houston, and so not only was I looking for a different contractor in another city, but it was a different mindset, right? It was going to be somebody who wasn't going to try to make all their money on a single unit, on a single rehab. They were going to have volume. They were going to, essentially be my partner to renovate 20 units in my first apartment complex, knowing that that was just one step in the process and that I'd be getting other units, other properties, and they'd be along for the journey. And that's exactly what happened, is that the contractor that I ended up finding, that he and his company renovated my 20 units. And then as soon as I got the next property, which was a 60 unit, he and I got talking right away. And he came out and even, did a lot of the inspections for me as we were doing due diligence. So I think, I'll say this too. A lesson learned for me is if you're chasing that nickel every single time and always trying to squeeze everybody, eventually that's going to damage the relationship. Now, it's a balance, right? You can't overpay, but I think you gotta treat your contractors right.
Yeah, yeah, then that's a great advice. Yeah, because as I said, if you're always going to look for ways to save on everything and like squeeze everything that's possible, from all the dollars that you're looking to pay to other people that they're going to provide you a crucial part of the business. I mean, it's going to come back and bite you in the butt, for sure. So don't be afraid to invest in the people and they're basically the relationships long term, which is what it is. So talking about multifamily, but again, talk about the market itself. So Texas, there's a lot of people talking about Texas as being one of the great markets to invest, especially for multifamily. Because I mean, maybe you don't know from the top of your head, but is it like how big is the sales volume when it comes to multifamily? Maybe approximately.
Oh, that is a tough question. I'm not
Yeah.
sure I can really
Yeah.
answer that one
So
off the
so
top of my head.
yeah, yeah. So it doesn't matter. Look, but there's a lot of transactions going. That's what I'm saying. Like a lot of transactions, people are buying and selling property. So can you just mention maybe a few aspects of why somebody should look to invest in Texas market with in multifamily deals, either actively or passively?
Yeah, I mean, you're right. Texas is a very hot market. Yeah, I'm from the Houston area and have been invested in Houston and even College Station is, I'll call it the surrounding areas. because it is just, you know, an hour and a half away. Dallas, super hot market. A lot of my colleagues invest in the Dallas markets. You know, I think just all around, Texas is very pro-business and you know, makes a lot of opportunities for both small and large businesses, and a lot of companies relocate here. Mm-hmm. It's just, you know, a little bit more economical to run a business in Texas, and our big markets like Houston and Dallas are just growing exponentially. You know, in a place like where I'm investing right now in the Bryan College Station area, it's a little bit different in that it's a university town. So it's a little less about large corporations being there and that driving the population for what we do. And we don't necessarily, you know, have a student housing property. It's really, I mean, we'll rent to college students, but we rely on the working class people that support the overall infrastructure and economy in a town that's anchored by a large university. So I think, you know, just Texas is hot all around, but you know, Bryan College Station is still very close to the Houston market. I'll just call it a Houston submarket. Yeah, very strong market all around.
Okay, so talking about your 80 unit portfolio, can you just like run through the numbers and let us know, like you mentioned the 20 unit multifamily deal. So how, like, what is the biggest and the smallest deal that you have in that portfolio?
So right now I've got the two multifamilies. So I've got a 20 unit and a 60 unit. Mm-hmm. And then prior to that, I was, like I mentioned, doing a lot of single family. But the 60 unit we acquired about a year ago now. And that one we actually raised capital and syndicated that. So we've got 26 limited partners in that deal. And, you know, it was a $1.4 million raise when we syndicated.
Mm-hmm. Okay, got it. So talking about what you currently have in the pipeline, because I assume that you're still actively looking for deals, even though there's people saying that it's very tough during the market conditions to find any good deals that would make sense. And of course, I'm talking from, you know, for syndicators. Of course, there's people transitioning into small apartment complexes with the JV, you know, strategies. But can you talk about your deal underwriting criteria and what type of deal specifically you're looking for?
Yeah, so, you know, the kind of deals we look for, I think you mentioned during my intro that, you know, it's a lot of value add that we look for. You know, from a I guess syndication standpoint, for us, the big nut is upon sale, right? Because we're looking to have a heavy lift in our properties. Obviously, you know, we're going to have good cash flow distributions along the way, but really, we're looking at a 5-year time horizon. We tend to look for properties that are kind of in the C class, maybe B minus class type of property. And, you know, obviously looking to have those in C plus to B type neighborhoods. You know, I'd say size wise, you know, we went from 20 to 60. I think for us, the next step is probably something around 100, maybe 120 unit. But I think we'll still stick with our model of you know, value add. And, you know, we love to just roll up our sleeves there. And, you know, it can be intimidating for some people when you step into some of these properties and see how rough they can be. Mm-hmm. And I'll tell you, I mentioned the 60 unit we picked up just about a year ago. The 20 unit we have, I guess it's about 2.5 years now. And when we picked that property up, I mean, it was a catastrophe. It was just, you know, all the units were renting for about $500 a month. We basically turned that into a $750 a month type of property, which is an enormous lift on rent bumps. But if you can imagine, you know, with that kind of rent, $500 a month, the units were in pretty rough shape. Yeah, we actually had, you've ever seen the TV show Hoarders? It's a real thing. We actually had a unit that was so full of stuff, trash, junk, everything, that we couldn't even inspect it. We couldn't even walk through it. There was no room for anybody to walk. So we had to roll up 2 large dumpsters and spend about 3 days just hauling out stuff just to get it all out.
Wow.
It was very sad.
It was that much.
Yeah.
Wow. Okay. So, but look, it's part of the business, right? Like, look, sometimes you have to, you know, life works that way. You know, it's not going to be there for us. It's just going to be there happening. And there's other people, you know, like there's another 60 people that living in the properties, and not of those people, not all of them will appreciate the apartment as some other people do. And they will do whatever to, you know, because of maybe some accident with the property management, they will do whatever to kind of get people back. And, you know, like, world is just crazy. There are some crazy people, you know.
Well, I'll tell you something, you know, in seriousness, I, you know, I watched those shows and all that stuff, but I didn't really realize how serious of an illness it is. It's a real issue. That particular tenant, she wasn't even living there. So she was paying rent. And so that's why nobody even realized what was going on, because she was living with her daughter and she just kept sending the check, which is great, right? She just kept sending the rent check every month, but she wasn't even living there. And nobody knew. The daughter didn't even know that she was living in an apartment. So when we finally reached out and said, listen, I mean, we need to get in there and deal with the situation, I mean, she broke down crying. She had no idea. So, you know, I bring that story up just to say that, you know, we see opportunity in things that maybe most people don't, or look too intimidating. It, like you said, it's part of the business, right? We're not looking to take advantage of somebody's, you know, unfortunate situation, but we are looking to improve properties and really make it just a nice community to be a part of.
Yeah, exactly. That's how the diamonds are made. You know, they're just pieces of coals that if you put them under pressure, you know, it's going to become this kind of beautiful thing that women like to wear on their rings, on their fingers. Yeah, but it's exactly like, look, you have to handle that type of pressure as a business person. You know, like, you don't know what's going to come up. And that's where I want to kind of transition with my next question is, how do you handle like day-to-day operations once it comes to property manager? Like, do you manage, you know, some of the properties like the 20 units yourself, or you have a third party, or do you have a vertically integrated company? What's happening with that? Can you talk about a little bit?
Yeah, so that was part of my transition when I went from single family to multifamily. You know, when I first started, probably like a lot of, you know, accidental landlords, it was easy to manage 1 and 2 and 3. And I actually enjoyed doing property management back then because it allowed me to get close to my business, and I'm a process guy. So I wanted to understand the right process for me to have as my operation. And it forced me to also have systems in place. So everything, you know, I never forget my very first tenant. I obviously forced in her lease that she pay on the first of the month. And so at about 11:59, I see a car pull up and somebody comes running outside and sticks a check under my doormat. And I was like, all right, she's trying to get her rent check in by the first of the month without getting, you know, a late fee. And I appreciate that. But oh my gosh, she's like driving to my house, leaving a check under my mat. Imagine if I had, you know, 80 tenants and they were all doing that. You know, it just, that was kind of a defining moment where I said, I've got to, you know, really put everything online, make it easy for tenants to be able to pay. And I don't want people showing up at my house. So there'll be another place for them to drop payments if they need to, that sort of thing. But everything became online, from, you know, the vetting process, you know, screening potential applicants, to rent payments, to maintenance requests, you know, all that stuff. It was all online. And so when I went to multifamily, I said, all right, well, I'm going to shift this to third-party management, first of all. And I underwrote the deal knowing that I was going to have third-party management as well. But also, it was an hour and a half away. So I knew that I couldn't just drive out there if somebody's toilet broke. I had to be able to rely on somebody else. And that was a change for me, because I had to let some control go and trust in another party to manage my property. And we tried some things. It was who do you use? You try to go with referrals and that sort of thing. And so we tried a property management company that I met through a conference, and it was okay, but in the end, they weren't really aligned with us on our vision and interest in the property. And so we made a change, I guess, about March of 2019, maybe it was, and so never looked back. That same property manager manages all 80 of our units now, and it's been a good relationship.
Got it. So maybe you can bring a couple of kind of key points for the people who are looking to hire the right property manager for them that will align with their personal business goals. Like, what is the process that you go about when it comes to vetting a potential property manager?
Well, I think part of it, you obviously want experience, right? So what you find is there might be property managers that are very accustomed to managing a single family home, and that may not necessarily translate well into a multifamily type of environment. So you want to make sure that they do have the right experience for whatever you're doing. If you're in single family, then maybe that's okay, but if you're multifamily, you want that kind of experience. I think the other part of it is, you need to understand their staff and their experience and capability to be able to handle, the kind of volume that you may have. For us, for 80 units, which isn't a lot in the big picture. I know folks that have 200-300 unit type of properties, but because our properties are value add type of deals, it takes a little while until they get stabilized. And so during that stabilization period, there's a lot of requests coming through, and not just on the repairs and maintenance, but the typical tenant issues that you have, the parking issues, or tenants complaining about loud noise or whatever it might be. You get a lot of that until you really build your community in the right way and get a stable property. So you need to make sure that your property manager is prepared for that. If all they're used to doing is managing, a very steady as she goes type of property in an A-class type of neighborhood, that may not be the right fit for you if you're trying to reposition a property in a C-class type of neighborhood.
Okay, got it. Thanks for sharing that advice. Super valuable. So talking about the property management, and one of the duties, of course, is, to collect the rent. So can you talk about, because that comes up a lot right now in the conversations among, the operators in multifamily space out there. So can you talk about like your personal experience so far? Did you had any issues, and how does your property management goes about to resolving kind of these, payment issues right now and still during the COVID?
Yeah, obviously, like most people, we're trying to network and understand how other operators are dealing with it and what they're seeing. For us, it's kind of a couple different stories. So our 20 unit has been stable for a while, and that's a much different situation than our 60 unit. In the 20 unit, knock on wood, but we have had, in the entire time I've owned the property, we had one delinquency. We had maybe 4 late payments across all of our tenants, across all the units of the entire time we've owned it. We picked some great tenants, and it's been really solid. We have had really no vacancy. I think that most people during COVID, if they're living in a nice place where you're treating them well, And we didn't raise anybody's rents on renewals. So, I think that helps as well. They're sticking around. And so that's been great. On my 60 unit, it's been a little more challenging because we're still in the middle of a heavy lift, a big repositioning. And, we bought the property last November, which meant that we were going through the holiday time period. And then, of course, through the slower winter months and that sort of thing. And, and then COVID kind of came in around March, April, and so people started losing jobs and that sort of thing. So in the beginning, it was pretty tough. Now I'd say we've gotten a lot of that delinquency under control. We've had to go through some evictions and, kind of ebbed and flowed through various moratoriums that we had, with our local government on when we could evict and when we couldn't. There was a period we couldn't evict at all, and then it opened up, and then it closed down again. But we were able to evict some folks during those kind of breaks and moratoriums. Mm-hmm. But that was just, it was going to happen, and we had to start cleaning up the property a little bit more. But for people that have been with us for a while, that they're really trying, if something comes up and they just need our assistance and support, of course, we're working out payment plans and really trying to help them. We guide them to various charities and that sort of thing that might be able to help subsidize some of the rents for those folks. I tell you, we even, my property manager took up a collection, like a GoFundMe, across all of their properties, across all of the operators, the owners like myself, to basically, collect money that could be used for needy families across their asset base. Mm-hmm. And so I thought that was just a good way to kind of use our collective community to, help people out, because it could be my tenant or it could be your tenant, but if we're kind of helping each other out, then, we'll be there to support each other at certain times.
Yeah, that's beautiful. That's a beautiful effort right there. So yeah, so shout out to those people for making those things happen. So talking again, because now you're still actively, you mentioned looking for multifamily deals, 100 units plus, bigger type of assets in multifamily space. So going along the lines, are you looking like, what is your approach in diversification? Because there's a lot of people now paying attention to the storage units and mobile home parks and, maybe redeveloping existing office or hotels into multifamily. So you're planning to do like some of that, going along the lines, maybe, in the future, near future?
The short answer is no. The longer answer is, what I've found is I've seen a lot of investors chase that shiny object. And trust me, some of these things look really exciting and attractive. Like storage units as an example. The idea of not having a tenant complaining, to have the same kind of model where I can rent out units, and collect a monthly check, but not have toilets breaking and tenants calling out, that sounds pretty attractive. But it's not my model right now. And maybe, I can gravitate to it if it's complementary. And that's really key for me, is I need to focus and get really good at what I do. Mm-hmm. And so, I mentioned earlier that I tried some flipping in the single family space. Well, that was great. I had to try that. But, while it's fun and all, it's from a business model standpoint, that's not where I want to be. And so I think it's important to find a niche, something that works for you, that aligns with your goals, and just get really good at it. Because if you spread yourself all over the place and chase everything that looks exciting, while yes, it could give you diversification, I just don't think you can become the expert in it and really prosper. So I think, for us, what's next is keep going and leverage what we're learning, our processes and systems and network and so forth in the multifamily space. We may adjust our market just a little bit. And I think what we've learned in the COVID time is, while we had a huge anchor of the largest university in the country driving our economy and occupancy and all that, in a time like COVID, it could also be, I guess, a letdown to some degree, right? Because I'm not sure how things are where you live, but for us, the university is operating at about 50% capacity, and everything's just compressed. There's many opportunities or mandates for students to basically take classes online and not be present. Many of the classes aren't even being offered in a face-to-face type of format. Things like, where students might be off on Thanksgiving break and come back and spend the rest of their semester until the Christmas holidays. Now they're told, you're not coming back, because the city, the county, the state wants to make sure that students aren't going home and interacting with other people and then coming back to the university and further passing things around with the virus. So even like next year for spring break, kids typically have off the week of like middle of March for spring break. Now that's reduced down to a long weekend, a 3-day weekend, because they just don't want the kids going off to Cancun or wherever and then coming back and making the situation worse. So for us, we're recognizing that that's a pivot point. We love College Station, but we may want to diversify a little bit into a market that doesn't rely so heavily on the education system.
Yeah, makes sense. But at the same time, you're going to be involved with multifamily business going along the lines, at least for now, because like I see the words in the background, so it's probably some of that is marathons, if I'm not mistaken. So and that's the approach that it's very good in business too, because business is not a sprint, it's a marathon, it's a long game, and you have to just keep going. Of course, same in marathon, there's a lot of difficult uphills and downhills, and both of those are difficult, and there's long distances that you have to go through, especially these times. So again, talking about the multifamily itself as a syndication opportunity for people that they can come and invest with you, can you talk about how you're going to be structuring those deals, of course, by the SEC standards, and how people can invest with you in those deals?
Yeah. So I think we're going to continue our model of 506B. And so, having that relationship pre-established. So that's why, doing things like this is fantastic, because we love to network and get to know people. And that's been pretty successful for us. And I'm personally pretty active in our local communities. I love to just keep expanding my network, getting out there, attending conferences and meeting folks like yourself and these type of opportunities. And I'm pretty active too in just the overall national and global forums out there, things like Bigger Pockets and so forth. And so that's a great place to meet people. And, sometimes online relationships form, physical relationships, and you get to know people that maybe you wouldn't have normally thought of getting to know. Yeah. So we're going to continue in the 506B.
Yeah, awesome. Yeah, there's definitely a lot of those virtual handshakes happening right now, during these times.
Yeah.
So again, the last question they wanted to ask you, again, part of the business, part of all of the things that you're doing personally, again, for yourself, for the family, for the people who are around you, for the communities, by adding value to their, for these properties and making a better living environment for the people who are, renting the apartments from, again, for the passive investors. But what is the legacy? Do you want to, is there some sort of legacy involved that you want to leave behind you as well?
Wow, tough ending question. And by the way, I love that you picked up on the marathon analogy, because you're right. As I've trained for marathons, I've done 24 of them. It becomes a lifestyle, and it's something that mentally, that going to be hard. There's going to be rough patches, but then there's going to be, you know, very uplifting parts of a marathon, or even the training to get to a marathon. And so, you know, that's part of business. And for us, you know, I love rolling up my sleeves. You know, a lot of people do this as sort of a passive investment. And I love to be an operator. I love, you know, being, I know some people say, don't work in your business, work on your business. Well, I do both. I love being in the business because when I am in the business, in the detail, it really helps me understand how the engine works. And I can't really focus on making the car better if I don't have my head under the hood. And so, you know, I just think, you know, what's next for me over the next, say, 10 years or so, I think I'll continue to acquire multifamily properties. I'll continue to be involved until they're stable, and then they can kind of, you know, run just more with our property management and other you know, partners that we're working with. But that's what's fun for me, is just you know, turn it around a community, just a full 180, and not just the renovations, but the overall feel. I love when you know, the city comes by our properties and they just say, wow, you know, I can't believe how different this entire community is from what it was. And it's that kind of feeling and you know, just appreciation that I think keeps me going. But, you know, I think financially, I'm not looking to get rich. I'm just looking to, you know, be able to decide when and how much I want to work and still have, you know, income that's coming in, even if I'm not trading hours for dollars. So it's really just a simple lifestyle.
Awesome. Great. And again, there's a lot of great pieces, you know, tips, strategies, some mindset, motivation, a lot of different things that, you know, we covered today on the show. So for you guys and girls who are watching this episode, one thing that I wanted to ask you, if you share this episode with a friend of yours who is looking for these tips and strategies and those motivational pieces to kind of propel them into multifamily investing and whatever that is, active or passive, make sure to send this episode along. And Tony, for you personally, just want to say a big thank you again for being on the show and providing all these valuable pieces for people so they can learn and about multifamily syndication and, you know, how is that going to benefit them financially. So I really appreciate you for coming on today.
Thanks for having me. Been fun.
Thank you guys. Again, make sure to pass this episode along to a friend of yours. And as always, I'll see you next time. And thanks for watching.